All right, great. Well, we'll go ahead and get started. We have a few participants that are still coming in here, but I just want to introduce Josh Ziegelbaum from Legacy Group, and tell everybody a little bit why we do these presentations at Rocket Dollar. Um, so the webinars that we have are really mainly for awareness, right? Because there are a lot of people who still aren't very familiar with how a self-directed retirement account works, whether that's an IRA, a Roth IRA, SEP IRA, or even a solo 401k. So there's a lot of different ways you could use our accounts to help benefit your retirement. Now, if you are interested in learning more about Rocket Dollar, we do have a knowledge base that has about 200 plus articles that you can take a look at. And if you're interested on what type of investments are available, we have a partners page that you can take a look at as well, where Legacy is often, well, not often, it's on the page, and you can take a look at it and get a link to their website as well. So Josh, let's go ahead and introduce yourself and tell us a little bit about Legacy Group.
Sure. Let me pull up some slides here that I prepared. Give me one moment.
Yeah, no problem. I'll try not to bother you and ask a bunch of dumb questions.
That's okay. Can you see the intro slide here, Nick?
I was just looking at some gorgeous oceanside. There we go. We have it.
You got it here? Perfect. So anyway, I did a pre-recorded webinar for Rocket Dollar previously, but happy to have a live presentation here to revisit the Series C investment opportunity for Green Coffee Company, tell you guys a little bit about what we do specifically at Legacy Group in Latin America, the investment opportunities we bring to our group of high net worth investors, and then also a bit about the Colombian investment landscape. We're going to touch on that first, actually, before we dive into the deal. So going to do a little intro on myself. My name is Josh Ziegelbaum, Director of Investor Relations at Legacy Group. We're an alternative asset manager focusing on unique investment opportunities that produce high and social environmental impact in Latin America. Green Coffee Company is our flagship portfolio company. We have over 400 investors participating in that deal. And before we get into that, I'm going to talk to you about Colombia and the investment landscape and why we view that it's ripe with opportunities and that investors should be looking at the region. So these are some of the highlights that we're going to dive into momentarily. First being high upside and low initial investments, macroeconomic characteristics, some stats about the US and Colombia and trading activities. We're going to talk about some of the history of democracy in Colombia, gaps in the business ecosystem. We're going to talk about some of the microeconomic conditions on the ground in Colombia, the large domestic consumer market and how it's growing, and then how investors should be looking at the region as a means to diversify their portfolio. First being high upside with low initial investments. So the current exchange rate for US-based foreign investors is the most advantageous that it's been for investing directly into Colombia ever. On a purely US dollar basis, investments today cost investors in US dollars 50% of what the same transactions would have cost them in 2012. So investment amounts that enter the market are naturally lower. Colombian businesses are proving to have incredibly high growth potential that we see in emerging markets. And there's unicorns such as Rappi and others making foreign investors wealthy in recent years. This chart here shows you the Colombian peso versus the dollar. You can see that sharp movement over the last 10 years, another leg higher in the last 12 months. Even crossed over 5,000 to 1, up from under 2,000 to 1 back in 2013. What this means is that all else equal, dollars going into the country buy more assets and investments go further. So what we focus on are real assets such as acquisitions of farmland. So as the exchange rate becomes more favorable, that makes acquisitions in Colombian pesos more attractive for US dollar investors.
Right, and we've been seeing the dollar get stronger with the rate hikes in the most recent months, and as it appears, it looks like they're going to continue to keep them going up.
Absolutely, and that's a lot of something that our investors have their eyes on. We obviously have our eyes on it at Legacy Group, but the sharp rise in rates is changing the environment, that's for sure. Investors are focusing on businesses that produce real income. They're focused on profitability, not just unlimited growth without profit. So the environment's definitely changing.
Yeah,
we're seeing that. So in terms of the democratic situation, Colombia has a long history of democratic institutions. It ranked #1 in Latin America for corporate governance in a recent global competitiveness report, #2 for business dynamism and financial system stability. It's actually the longest running democracy in South America. And this establishes goodwill in the foreign direct investment market. The US is Colombia's largest trading partner, and that should continue to grow. There's an opportunity for a revamp in the global supply chain with the tensions that we're having with our trading partners out in Asia, such as China. As supply chains evolve and the US is refocusing their key priorities away from China, we believe Colombia will stand to benefit. The COVID pandemic really increased this, becoming a reality, has really connected the world from a trading perspective. If Latin America captured just 15% of US imports from its top 10 destinations, the region could increase its exports by 72 billion a year. So there's really a lot of opportunity for exports from Latin America into the US. And we're hitting that front and center with what we do at Legacy Group and through our portfolio companies. So this is an interesting one. Gaps in the business ecosystem that can be exploited. There's really inefficient industries in Colombia. Entrepreneurs are flocking into the region to fill these gaps in markets such as banking and finance. We're seeing it in agriculture as well. Highly fragmented market there that's ripe for opportunity. And opportunities are being generated given the additional input of foreign capital, real-world human capital, and world-class technological integration. For example, what we're doing at our companies at Legacy Group. Deal flow is really lacking in developed venture capital markets. Firms have excess capital and valuations are through the roof. And venture capital firms and high net worth investors have to look outside their home markets for arbitrage level returns. And there's really less competition in the market, and rewards are higher to those who are able to deliver in Colombia. It has a large domestic consumer market. The population is currently over 52 million and is projected to continue to grow. Domestic wealth creation is increasing. Consumer spending reached an all-time high in Q3 of last year. And that wealthier population adds value to foreign direct investments in Colombia. Then finally, Colombia acts as a strong diversification play. We find that our investors are heavily allocated in US-based assets, whether that be the homes that they own, the stocks and bonds that make up their portfolio, or even the other alternative investments that make up their portfolio. And we recommend that they shouldn't just diversify across asset classes, but across geographies. The current structural, political, and monetary issues that the US is facing makes it more reasonable to look outside of the US for diversification. We would advise anyone, given that the current issues that we're seeing here in the US, it's an excellent time to begin looking outside of the country for investment opportunities. There's a lack of investable asset classes in so-called developed markets with the potential returns in excess of inflation, currently running the way it is. And within the Latin American bucket, there's no better choice than Colombia in terms of stability and upside for investors.
Right. So that would mean that this would get classified as a developed markets type play, right? Emerging markets, developing markets sort of position in your portfolio.
Exactly. Yeah, definitely developing markets, emerging markets play. And there's really a lack of opportunity in the developed markets, such as the US and parts of developed Europe, which make it more attractive to be looking at emerging markets. When investors usually think of emerging markets in terms of portfolio allocation, they'll think of Asia. And right now, with the kind of instability and trade tensions and just overall tensions that we're having with our trading partners out there, it doesn't seem like a place where investors are interested in deploying fresh capital. So we think we should look closer to home in Latin America in terms of getting that growth that you would find in emerging markets.
Right.
So here's an example of how we provided diversification for our investors. The Green Coffee Company is a Legacy Group portfolio company. It's a consolidated farming operation based in Medellin, Colombia. Our innovative business model allows us to have complete control of the supply chain, and it's currently Colombia's #1 largest coffee producer. So we're going to dive into some of the terms of the Series C round, which is the round we're currently in, which we're finalizing in the next month or two. I'm going to talk through the summary of terms, use of proceeds, dive into the business plan a little bit, We'll go over some of our projections, and then we'll do Q&A at the end. So please, if you have any other questions or questions in general, as we go through here, feel free to type them into the Q&A or the chat box, and we'll address them at the end of this presentation. The Green Coffee Company is a U.S. investment opportunity. So our investors own common equity in Green Coffee Company Holdings, LLC. In this Series C round, we're issuing $25 million of fresh common equity. We have a minimum investment of $100,000, and the opportunity is open to accredited investors only. And it's, of course, self-directed IRA eligible. The equity funding is really expanding our dominant market position. We're already the largest coffee producer in the country, but our ambitions are not complete. We have a goal in the next few years of becoming the largest Arabica coffee producer globally through our expansion plans. We're also building out additional verticals. In addition to purchasing more land and building more facilities and replicating what we do best, we're earmarking some funds towards a US-based roaster and also a Colombian-based distillery to create spirits from waste of coffee production. This $25 million equity round is being done concurrently with $75 million of debt financing that we're sourcing, for total proceeds being $100 million. The pre-money valuation going into the round was $67.5 million, so we'll be right under $100 million post-money. The base share price in the Series C round is $1,200. We divided the raise into 3 equal tranches of $8.33 million since launching in September, and now we're in the final tranche. We have under $3 million remaining to be committed to by investors in this $25 million Series C round, and I expect to fill that out in the next month or two. So touching on the use of proceeds, mention the figures that we're looking to bring in here. This slide breaks down that use of capital. You can see more than half of the proceeds are earmarked towards farm acquisition payments and also the build out of more infrastructure being the processing facilities that we use to process our coffee. And then we have 15 million that we're earmarking towards our US-based roaster. We want to go more vertical through sales in the US, and we expect that US-based roaster to be the key in order to do that. And then we're also monetizing the waste, as I mentioned, from coffee production. Alcohol distillation facility is being built out as we speak. We have our test distillery already opened and on site at our wet mill in Salgar, Colombia. And we have the full alcohol distillation facility expected to be online by end of year here in 2023. And we expect at capacity for that facility to produce over 38,000 bottles of vodka per day from the waste from our farms.
So this, I know I would probably get a biased answer from you on this, but have you tasted the alcohol, the vodka?
I have not tasted the vodka. We're doing
Okay.
test batches of ethanol right now, but people have asked me that quite frequently. But coffee vodka has been created in the past. It's not a new product. We just believe that we're the first ones that are creating it at scale and in an industrial capacity.
Okay, good.
From what I'm told, you can't tell the difference between coffee berry vodka and normal vodka that you would buy in the store.
Great.
So our story is one that's really exciting. I'm going to take you kind of back to the beginning and tell you where we got to, how we got to where we are today. So in 2017, we seized the moment to create the company, and we wanted to challenge Colombia's traditional methods in the coffee industry. It's been plagued by generations of underinvestment, particularly foreign investment, and a heavy amount of decentralization. So it's very fragmented, a lot of smaller landholding families that control the majority of the land. And we executed on our thesis of changing the industry from back in 2017, and our ambitions are really growing. So in less than 5 years from when we set out to do this, we created the business, we built the business to be the #1 largest producer of coffee in Colombia. At the time that we issued this presentation, we had just over 6,500 acres in land holding in September 2022. As of today, we're up to over 9,000 acres. So we're continuing to execute on those expansion plans, which we're going to dive to further on in the presentation here.
I've got a question on the underinvestment part that you had mentioned. Would that have anything to do with crime rates or any influence from drug trade or anything like that?
I don't think so, because you've seen, using Mexico as another example, there's a heavy amount of foreign investment going into Mexico as a country. And I would argue that Mexico, unfortunately, has issues with crime and drug trade that
Yeah.
most people are familiar with. And Mexico is really, I'd say, has some of the highest growth potential in Latin America next to Colombia. So I don't think that's it. I think that investors are just don't have many opportunities in front of them, and it requires them to be on the ground in order to manage those investments. It's not something that could be done from afar, remotely. You really need boots on the ground. So we're willing to live where others may not, possibly in certain cases. You know, the management team at Legacy Group, you know, not that Medellin's not a great place, it absolutely is, and it's a wonderful place to live. But in terms of private equity asset managers such as ourselves, a lot of them are based in the US. There's some globally, of course, but we're just not seeing a focus of investor capital into the region at the scale that we're bringing it into, especially from high net worth individuals. You're seeing some institutions flow into the region, a lot of investment there. But I'd say there's a lot of factors at play, but Colombia is most definitely a much safer place than it was 20, 30 years ago, very much open for business. And there's investment coming in. I'd say we're early in terms of what we're seeing on the ground. We've seen in recent years a heavy flow of investment, but we've been operating on the ground there since 2017.
I see. Thank you.
Oh, you're welcome. So in terms of some stats of where we are today, we're at over 9,000 acres of land holdings. We have over 11.5 million coffee trees, more than 400 full-time workers. During our primary harvest, we have over 1,000 people working at the coffee company. The number of investors is over 400 today. In terms of where we are at now in the Series C round and what's already been funded, we have over $55 million committed to the company by these 400 plus investors. That's investment capital that's been funded into Green Coffee Company directly. And we still have a small balance in the Series C. And by the time that we wrap all this up, we'll be just over 60 million. There's several environmental certifications such as Rainforest Alliance, cafe practices. Last year, the company, Green Coffee Company, received an award from Colombian Congress for best technological innovation in agriculture. We're really leading the coffee industry in Colombia in several key metrics: full-time employment. We're working with single mothers who are heads of household. We're focusing on circular economy, using all the waste in every part of the coffee cherry to not only create product, but to drive revenue streams for our investors. And so these are some of our stats and our track record to date.
Great. Thanks. On the certifications, is there any similarities to, say, something like a fair trade?
There are. So fair trade certifications allow you to sell at a premium as well. So there's similarities in the sense of the diligence process, where you would have to get members of that organization to come out, inspect the farms, or inspect the business, whatever it is, and ensure that it meets those characteristics. But we're seeing that fair trade certified coffees are selling at premiums. That differential has been increasing as well. But similarly to Rainforest Alliance and cafe practices, which also command a premium above commodity.
Okay.
But they're different certifications, though.
Right.
Yeah. So where we're going is what I'm really excited about. You know, we've done a lot already, but I think the future is very bright. So through 2023, we want to continue to scale our farming operations, replicate what we've already done in Salgar. We're targeting another region in Colombia so we can have year-round production. And as you know, a good chunk of the budget from the Series C is earmarked towards these acquisitions and build out of processing facilities. So we're going to continue to do that through year end here in 2023. We also expect by the end of the year to launch our own vodka and spirit products made from the coffee byproducts in our full distillery. And then by next year, roasted coffee. So going vertical into roasted coffee sales in a B2B format. We expect our US-based roaster to be online and operational in 2024. So just some snapshots in time of where we were in our last funding round, where we are today. Series B in 2021, we were Colombia's third largest coffee producer. We had just over 2,000 acres, 3 million coffee trees. We were forecasting a 6.4x equity multiple on invested capital for our Series B investors. Fast forward to where we are today, end of 2022 when we initiated this raise, and then into 2023 where we are now. We solidified our position as Colombia's #1 largest coffee producer. Current number of acres is over 9,000, so more than 3 times the acre count that we had in 2021. The number of coffee trees has grown from under 3 million to 11.5 million coffee trees planted. We're now forecasting an 11x equity multiple on invested capital for our Series C investors in Green Coffee Company.
How many different facilities is that?
Right now, we have 2 wet mills already established, and we're
Okay.
establishing more, as well as a dry mill. But we have over 30 farms right now.
Oh, nice. Okay.
I'm going to talk a bit about the management team behind both Green Coffee Company and Legacy Group on this slide. Boris Woolner is GCC's president. He's done a great job since we appointed him a few years ago in driving forward innovation. He has strong working relationships with coffee distributors, government officials, logistics providers, and Boris and Cole and Adam sit on our board of directors. It's a 3-member board. Cole Shepard is the founder and GCC board member. He has a diverse background at PricewaterhouseCoopers, overseeing mergers and acquisitions internationally. He founded the company, and he's a Legacy Group partner as well, along with Adam Jason, Legacy Group partner and GCC board member. Adam has a full career as a corporate lawyer, working at Jones Day and other firms in the US, and he's been living down in Medellin along with Cole for the last number of years, operating the company on behalf of our investors. Our CFO, Leonardo Sanchez, was working at Fox Corp Latin America prior to joining us. We have Chris Kelly as our senior advisor, joined us about 1.5 years ago. Chris is a partner at Jones Day, repeatedly named one of the leading lawyers for business. And he's also joined by Steve Oakland, who came onto our advisory board last year, in addition to Chris. Steve is the CEO and president of Treehouse Foods. It's a publicly traded company in the US. Steve oversees over $4 billion a year in revenue at Treehouse Foods. Prior to that, he was the president at J.M. Smucker Company's food service division, overseeing Dunkin' brands, Monk Folgers, and others. Steve is bringing a tremendous value to the business, along with Chris, in order to drive forward our expansion plans and help facilitate the exit on behalf of our investors that we're expecting to do in the coming years. So our execution strategy is based on 3 core pillars. Pillar 1 is what we do currently and what we do best: farming, production, and green coffee sales. So even though we're already the largest producer, I mentioned we want to continue to grow. We would like to get up to 15,000 acres by year end here in 2023. Pillar 2 is going more vertical into large scale roasted coffee sales. We're targeting Houston, Texas as a market for the build out of our US based roaster. We expect that roaster to drive the majority of our revenue in our planned exit year in 2026. $217 million of the total $266 million expected to be achieved in that year. Pillar 3 is the build out of vodka and spirit production from coffee waste. That's a distillery we're talking about. The distillery is expected to drive $49 million in revenue in 2026, and really at a very high margin, considering we have access to this waste readily at our facilities in Colombia. This slide gives you a visual on Pillar 1, all the way from planting to delivery. So we have greenhouses on site at our farms and at our facilities in Colombia, a very large one, I might add. And we have heads of household, single mothers heading up that nursery, and they're in leadership roles. It's something really special that we have going on at the farm level. After the trees are ready, they're then planted out on our farms. They're monitored by our agronomists until they mature. We then harvest, processes on our own wet mills, then through a dry mill, quality control, and then delivered to our end clients. We sell in Colombia, and then we also sell this green coffee globally to specialty buyers and traders throughout the world. So this is prior to some recent acquisitions we did. This table here, or I should say image, shows you up to when we were at 6,600 acres. There's been 3 other acquisitions since then, getting up to 9,000. But this illustrates a nice visual of our growth through acquisitions since the initial funding round. You can see in 2018, we bought the green area of this map. It was under 1,000 acres, just over 600 acres of land holdings. And we've grown to over 9,000 acres here in 2023 through a series of acquisitions. And we still have quite a few acquisitions lined up through year end. Salgar is a town. It's a small town. It's a coffee town, about 2 to 3 hours driving outside of Medellin. Bottom right-hand corner, you can see the road. There's also other means in which you can get out there by helicopter, but this is where our operations are. Our corporate headquarters is in Medellin, but all the farms and all the assets of our investors are in Salgar and the surrounding area in Antioquia.
So just real quick, I mean, if there were to be a fire, which seems unlikely that it would take out your whole operation, but maybe something like a natural disaster, what kind of protection does GCC have?
Sure. So we have the typical property and casualty insurance in place, Nick, which protects against natural disaster, things such as fire. And then also, the farms some of them are connected, but you can see we're geographically dispersed.
Right.
So even though there would be claims as a result of that fire, it would be unlikely that all of the farms would be damaged by one. It would likely be in a particular region, and we could constrain it. This map doesn't really show you the scale where we are, but our land holdings they're quite expansive. So it would be challenging for a fire to spread to all of them, but we have the insurance in place in the event that we did have one.
That's what I thought. Thanks.
Yeah, you're welcome. So moving on here to pillar 2, which is a large scale roasted coffee sales. This was a snapshot from September, and our all-in cost and sales price for green coffee at that time. Margins were just about 30% on green coffee, all-in cost of $1.71, target sales price over $2. Shifting into roasted, you can see the margins expand. So getting into roasted, we can have margins closer to 50%. And doing so will allow us to realize more revenue, but also more profitability for our investors.
I had a question come in. Thank you, Charles. Why not have the headquarters near the farms?
Great question, Charles. So the bulk of the cost of the roastery is the equipment. So we have a $15 million budget. 10 million of it, more or less, is the equipment that we're ordering from Europe in order to facilitate it. So really, it's a matter of where is the talent, human talent that could run this, and where are our end clients. So we would like to focus on the US for our end clients in the roasting space. So having the roastery in Houston, as an example, gives us easy access to distribution channels in the United States, as well as the talent that we would like to operate it. I'm confident there's human talent in Colombia that can manage it, but it's really for the logistics of selling to our end clients, the roasted product.
Oh, thanks.
Of course. So at capacity, we expect this facility to do over 30 million pounds of roasted coffee a year. I mentioned in a previous slide, over 200 million in revenue is expected to be achieved here. That's at a sales price of just over $7 a pound, wholesale B2B sales price. Capital cost of just $15 million, and it's expected to be completed in 2024. These bags here that you see on the slide, this is our direct-to-consumer brand, Abira, that green coffee company launched at the end of last year. It's currently available for purchase online, being roasted through a third party right now. But Abira is our direct-to-consumer brand, and you could absolutely try it out. We can make a link in the replay video of this recording.
That'd be great. We'll also have a link to the video in the comment section when we have this on YouTube.
Perfect. Pillar 3 is the untapped potential of the coffee cherry. The background here is important. More than 80% of the coffee cherry is actually waste. It's discarded, and only 20% more or less is the bean that we know and drink. So getting rid of that is akin to throwing away a viable revenue source, in our opinion. So we want to focus on spirit production first, and then move into other products. So there's opportunity even beyond the production of spirits such as vodka to create other products at scale. This is something that can produce quite a bit of revenue for our investors and at a very high margin. We're expecting net margins approaching around 80% even on the byproduct sales. So at capacity, I mentioned this stat on a previous slide, up to 38,000 bottles of vodka per day, expected to do $49 million in top line revenue at an $875 sales price in a wholesale manner. This is just for a capital cost of $6.4 million. We expect our distillery to be online here in 2023. It's going to be right on site at our wet mill. So unlike the roastery, the distillery has to be in Colombia because there's a short shelf life for the waste product. Could be even 48 hours. So right when the cherry is being processed. Waste goes one way, coffee bean goes the other way, and then we'll have the distillery on site at our wet mill directly. Something we didn't touch on too much would be the impact. We really drive value by doing things right. Over the last decade, we've seen other companies focusing on this, so-called ESG, impact investing. What we do is absolutely impact. We focus on value creation, efficiency, creating waste, really building on circular economies, having a positive image, and sustainability. So sustainability is important, not just because it's the right thing to do, but we believe that it will drive value for our investors as we look towards an exit. Some more about the key impact initiatives. I'll just highlight a couple here. Formal employment resonates with me. Sector average is just 1% in the coffee industry in Colombia. We have over 75% of our employees receiving pensions. On the healthcare side, this is an important one. 100% of our employees have healthcare. Sector average is only 3%. Then in terms of formal banking, we're more than double the sector average. The Sustainable Development Goals by the UN are on the left-hand side here. This is what we focus on. We have equal opportunity for women inside and out of the company. We have the single mothers who are heads of household and leadership positions that I mentioned. There's a lot around impact. We have an entire presentation on it, an impact presentation, but these are some of our key initiatives at GCC. Shifting gears to our exit plan and financial projections for our Series C investors. As we replicate our core model, grow our roasted channel, build out the byproducts business, we're readying the company for a sale or more preferably an IPO in US markets. Potential exit opportunities could be a corporate buyout, private equity buyout, the IPO route. We're really creating this to be dual packaged and ready as sale ready, but IPO ready. We have just 3 years of audited financial statements as we wrap up our 2022 audit, and we're modeling our exit on expected revenue in 2026 of 1.2 billion. The expected net income on that, just 60 million, and we applied a multiple of 20. By 20, we took the historical average of the S&P 500 and we applied that. The reason why we didn't take some of these comparables is that the first 4 that did public market transactions, incalculable PE ratios as they were unprofitable. A couple of the others were high PE. So we wanted to be conservative. We picked the average of the S&P, but as a small cap company, we do believe it's reasonable to achieve a higher valuation at exit than 20 times earnings should we go a US IPO route.
So this ties in really well with a question we received earlier. And then also I have a question on top of that. The question was, how does Green Coffee Company compare to their worldwide competition, right? Excuse me. Did you get that? I don't know if I need to repeat that kind of.
How do we compare to the worldwide competition?
That's right.
So I would say in Colombia, let's talk about Colombia specifically. We have the most advanced, or even Latin America in general, we have the most advanced coffee processing facility in all of Latin America, fully automated, with some of the best technology you can buy, imported from several different countries. I'd say from a processing standpoint, we're light years ahead of the competition in the region. In terms of the sophistication of the company and the corporate structure, the situation in Colombia it's very fragmented, as I mentioned. It's farming techniques that are decades old with a lack of investment and a lack of scale. It's a lot of smaller landholding families that sell their coffee cherries to the government collective organization, and they don't have their own processing capability. Even those that are processing are using less sophisticated facilities. We don't know of any investment opportunities in direct placements such as ours in coffee producers at scale and at origin. There's coffee companies that people can invest in, but this is not just a play on the branding. It's really a play on real estate as well. A lot of our investors are real estate investors. They like the fact that they have ownership in over 9,000 acres of land holdings, and they have rights to the cash flow from those land holdings. So it's really an operating enterprise where investors would own a portion of the overall business. Some of the other investments that we see out there are, parceled land holdings where an investor might own an acre and they get the production off that acre. That's not really comparable to what we're doing. We're building about enterprise value, not just single asset value, but that enterprise value is based on the assets on the balance sheet.
Right. Right, and that brings up another good point. Of all the different ways to invest in a commodity resource like coffee, be it an ETF or, like you said, some shares of a coffee company. I mean, your position is definitely more unique as far as what we're seeing.
Definitely, I agree with you. So just wrapping up here, we got a couple more slides. Financial summary. I'm not going to touch on every line here. Just point out those that are most meaningful, I'd say. Total revenue. So in 2022, we did over 10 million in revenue, and we expect to grow that to 266 million by 2026. Everything here flows to what I was mentioning on that exit valuation. So on that 266, we expect to do just about 86 million in EBITDA, 60 million in net income. 20 times that flows down to the enterprise value you see in the bottom right-hand corner, 1.2 billion. And net return for investors in our Series C round, 11x on invested capital if we hit that valuation at exit. And should we exit in 2026, which is our target year, 64.1% IRR forecasted for green coffee companies, Series C investors. We're in the final tranche of the Series C round. We're issuing shares at $1,200 a share. First two tranches have been fully subscribed since we launched in September. There's limited availability. As of the time of this recording, we have under 3 million remaining to be committed to. So if you're interested in getting in touch, here's my contact info. It's also on our landing page on Rocket Dollar, but you can contact me by phone or by email. Happy to address any questions here in this Q&A session or afterwards offline in a one-on-one format.
Great. Thank you, Josh. I do have a few questions that I wanted to get to that came through, and there just wasn't a way to insert them, but we have that now. So there was some varying price points on coffee, right? So I think somebody brought it up that it was $7.11 per pound in 2026 on one of the slides, which was higher than a previous slide. Could you explain that differential, and what's the assumption of the increased cost of coffee going forward?
Sure. So yeah, we marked it to rise with inflation first and foremost, of course.
Right.
So the roasted coffee price that was on that one slide wasn't marked to 2026. And then the sales channel assumptions are also different. So we expect that we could sell it in, I'd say the lower price was a more wholesale format. And then the target sale price that you saw, it's also B2B, but with more value added, I would say, in different sales channel formats than previously disclosed. So it's years apart from one another and getting built out to get up to that sale price over time.
And honestly, $7 a pound, really, I would consider to be affordable. Most recently, I've seen coffee go for $20 a pound, and that's right now. That's not 2026. So I'd assume a $5 premium, if not a $10 premium, by the time 2026 rolls around.
Yeah.
Hopefully not, because I drink a lot of it.
I expect it to keep going up in price. I
haven't really seen it go backwards. So this was kind of nice. Somebody is in Medellin listening to this webinar, and it's more of a political question. I don't know if you want to handle this one. I'll let you know what it is, and then you can accept or decline. But there was a recent presidential election with Gustavo Petro, leftist ties communist groups elected in 2022. Are you concerned? Is Green Coffee Company concerned about his administration? And if they would reverse any of the positive economic progress that Colombia has seen, or possibly create roadblocks for your company's initiatives? I mean, that's a lot to unpack, right? So
sure. No, I'm comfortable answering that. That's not a problem, Nick. So we've been keeping our eyes on this, of course, before and after Petro came into office. On the campaign trail, he spoke highly of the Colombian coffee industry, highly of making the country more of a producer and less of an importer of goods and services. So we believe coffee being the country's national product, that it stands to benefit greatly from the administration. And we've seen Nothing that pointing the other way since he's come into office. We have great support from the government. We had that award from Colombian Congress, as I mentioned, Best Innovation in Agriculture. We had a governor of Antioquia prepare an opening address at an inauguration of one of our processing facilities. And we had members of Congress there at that inauguration. So we feel very supportive by the current administration. While we have our eyes on it and there could certainly be some headwinds, we're confident that we can navigate the market on behalf of our investors, and we've done so since he's come into office. It's also creating buying opportunities for us. Whatever fear might be in the market has pushed the exchange rate a little bit as well. So all else equal, dollar per peso, we're able to buy more land holdings and more assets as a result of that. And then coffee being a commodity that's sold globally in dollars, there's an interesting hedge there. So short answer is we're comfortable with the administration. We've received support from the government to date, and we expect that to continue in the years to come.
Perfect. Thank you. And then another question came in. Thank you, JJ. Are you considering expanding to other coffee countries?
We are. Right now, we're focused on Colombia, but we're diligencing other markets. Some ideas the team has and areas that we're interested in would be Brazil or Mexico. So there's certainly opportunity for us to expand the business into other regions, but right now we're just focused on Colombia.
Great. Well, if you happen to do anything like a Garuda or a Sumatra, let me know. That would be delicious.
I will.
All right. So any other questions coming in? We have time for a couple more. Otherwise, we can go ahead and stop there. All right. It doesn't look like we have any more questions coming in, Josh. Just want to thank everybody for tuning in today. Again, we'll have this replay on YouTube along with some links in our comment section. Josh, is there anything else you'd like to add?
No, that'll be all. I hit on the main points. It's been great to present to you all about what we do at Legacy Group, the solutions we provide to our high net worth investors. Got to touch on what we do at Green Coffee Company. Like I mentioned, we're in the final tranche of the Series C funding round. So if any of you who are listening or watching are interested in learning more, shoot me a note at investor.relations@legacy-group.co or get in touch by phone. We'd love to chat with you.
Great. Thanks for spending time with us, Josh. And thank you for everybody who tuned in. Everyone have a great rest of the week. You got it. Take care.